Good evening, everyone, and my sincere apologies for the delay. Thank you for joining in early. I hope you are excited um, to be wrapping up class today. It's good to see you, Clement. Good to see you, Nkoyo and Michael. Thank you for joining in. All right, we have quite a bit to cover today, so please do ensure that you are plugged in completely and you are paying attention because I will be running through a number of things as we wrap up our entrepreneurship and financial literacy class today. And I hope that all the things you have learned so far, for those who are currently running business at whatever scale you've been able to deploy some of your learnings from here. And for those who are looking to start in, I hope that you have been greatly encouraged now to be able to at least place standard practice as you contemplate building your business. Welcome, Ifoma, and thank you, Nkoyo, as well. Awesome, let's get into it. So, first off, I want to appreciate the three people who responded to my assignment. Thank you so much. The three of you scored 100% each. The questions were very simple and they were practical, essentially just utilizing the concepts that we had learned from the previous class. So well done, Nkoyo. Well done, Elizabeth. And of course, well done, Joy. Nkoyo submitted first, Elizabeth submitted second, and Joy submitted third. All right. So today I want us to look very quickly through packaging and branding essentials. Now, these are not concepts that I imagine are strange to us because every individual interacts with goods, right, or services, and you would have noticed the different strategies that businesses have deployed in packaging their goods, right? Or branding both their goods and their services. Okay. So, first thing to pay attention to under branding essentials for anyone who's looking to doing business or anyone who is currently in business is your brand identity. For anyone starting business, you need to know that your brand identity foundation starts with your logo, right? It must be clear, it must be versatile, and it must be scalable. People must be able to see your logo and eventually be able to, with consistency in your practices, right? In you rendering a particular product or service, people need to be able to identify your brand with the service that you render or the goods that you sell, the products that come through. If you recall, if you were in the class, the very first class, we did a brand logo identification exercise, and I asked people to guess which companies owned those logos, right? In fact, there are companies that they don't have to have their name on the logo. Once you see the logo, you know that this is a particular company. So as you build your business, you also want to think about a logo that would resonate with your users over time, especially if you're in business for the long haul. Color palettes, it's typically brand experts will typically recommend that you stick between 2 to 4 colors. And I will show you maybe 2 logos today, just so you can see. Organizations typically try and keep their logos very simple. You know, they don't do with more than 4 colors in one particular logo so that people know they identify those colors with your brand as well. Your font type and your font size, of course, primary and secondary fonts that are associated with your brand, the voice and the tone. So defining how your brand speaks. Is it a playful brand? Is it a premium or a formal brand? Is it an eco-conscious brand? Those are some of the things that determine the voice and the tone of your brand. You know, so if you take a Disney, for example, Disney cuts across. It's both it comes across as playful, in fact, when you watch some of the productions from Disney, where they use in montages, right? You see it come through as very appealing to children. Brand guidelines. In some cases, it's called a brand manual, and every business is encouraged to have that, every organization, right? And it is what defines both your visual and your verbal essence, as it were, how people would recognize you. And it's mostly used by your designers, your printers. You may have noticed some businesses and you'll see some brand inconsistencies, right? You see some design somewhere, the font types are different, colors are different. You see them somewhere else. It's just the name that you can use to attribute, to recognize the company because it is all over the place, right? Positioning and of course storytelling. What do you want your customers to feel when they see your brand? It's important that you have defined your mission, your vision, and remember your unique selling proposition, your USP. We did that in class too, right? Excuse me, under our business model canvas. So, but your brand needs to tell a story, essentially. Your brand must tell a story. It must tell a story, it must take people through a journey of where you are going to, where you are taking them to. Your brand needs to be able to tell a story to your users, to your customers, and your potential customers that if you come on this journey with us, this is where we're taking you to. This is how you will feel on this journey, right? And of course, your packaging should reflect all of these elements, both visually and emotionally. There is an emotional side to every purchasing decision that customers make. We said that in one of our classes, right? I think when we're talking about pricing, there is an emotional side to every decision that customers make. And so you must, as a brand, as a business, you must be able to tap into that emotional side. There is the visual appeal, there is functionality that the product will do what you say it will do. But there is also an emotional side to business. So you find that some people would patronize certain types of business from an emotional point of view because they are locked in. There is something about the brand, there is something about their product or their service that resonates with them, maybe from a value point of view, maybe from a CSR point of view, but there is always a story that every brand must tell. Now, packaging essentials very quickly. Functionality first. You must think about that. Have you ever had to purchase a product and you struggled to get the product out of its packaging? It leaves you very frustrated. In fact, by the time you finally get the product out, you are not so impressed because like, so all this work that I did is only to be able to bring this tiny thing out. Some packaging can be very tedious, while some can be very easy to engage and interesting to engage as well. There are certain things you open the first pack and you before you even get into the main item, there is something, maybe a note from the founder of the business or the owner of the business. Oh, this has been designed with a lot of love, designed to ensure that, just a little note that sort of gets you excited and impressed. In recent time, maybe in the last 5 or so years, when we started going very hard in Nigeria about made in Nigeria brands, I noticed that a number of businesses have then started paying significant attention to branding. Gone are the days where you can just toss your item into a nylon bag for people to engage, right? Some people will, again, branding will appeal to their emotional side. Packaging will appeal to their emotional side, right? Because it will just give them a sense of, have you opened some packages that you just get the sense that this person, this business, they must have been very intentional in how they even produced the item. If their packaging is looking like this, and to be honest, there are a few instances where you open the package, eventually great packaging, but content is not as great, right? So some businesses need to create a balance because they have invested so much money in packaging and they have not paid attention, as much attention, right, to the actual product to leave users with the same experience that the packaging leaves them with, right? So it's important that you think functionality, choose materials based on either how fragile the product is, what kind of storage and shipping conditions will it undergo. Now, if you are dealing with a fragile product and you have to transfer with it, use a bike logistics, right, for your deliveries, it means that your packaging cannot be flimsy, because if your package is going to travel a distance, then you want to put it in, those boxes that can preserve the product itself so that it's not damaged by the time it gets to the user. Some businesses have suffered significant losses over time because they did not package their items properly. Great products, but at the end of the day, packaging is poor and they lose customers or lose business that way. Now, of course, in recent times, we've also started paying attention to the unboxing experience. Any business currently existing in this century, right, in this decade, needs to pay attention to unboxing experience. Customers like the intrigue and the suspense that comes with trying to unpackage or unbox their item. Let's say some, because not everybody likes the drama that comes with unboxing. Keep it simple, but some people like the drama. The second thing to consider under packaging, and please, if you do have any questions, drop them in the chat room so that I can engage with them as we go along. Materials and sustainability. So the types of materials that you use in putting together your package. Options include cardboards. I've just given options again. This class is supposed to be very practical. So things that you can easily run with, things you can easily deploy. Cardboards, craft paper, glass, metal, and of course, plastics. Then consider eco-friendly or recyclable options. Now, in the Western world, there's a lot more clamor for recyclable materials. It's gradually catching on here in our country, Nigeria, but some businesses are very well patronized because from the product to the package, there are recyclable materials being used. If you go into the stores, there is a particular company, I've forgotten their name now, but some of the Prince Ebano stores and the likes, they store their disposable cutlery pieces and plates and stuff. And it's very clearly written there that they're produced from recyclable materials, right? So those individuals who are into, sustainable economy, green economy, and, the likes, who like recyclable materials and are advocates of it, will naturally gravitate towards those types of materials, okay? Now, other considerations to have is your primary packaging, either using a product container, your secondary packaging, which can be a wrap, a tissue wrap, a paper wrap, or a box wrap. Of course, and then your tertiary packaging, which is what you put it in for shipping and for distribution purposes. Another point to note is your brand consistency. Now, there is the first type of branding essentials we described prior to packaging. Now, when you've packaged, you also need to think about all the things we discussed. It should feature in your packaging materials as well, your product name, in addition to your logo, brand color fonts, your tagline or short brand story. If your packaging material allows you express that much or that level of information, and of course your contact information, very important. If you have a website, if you have social media handles, now regulatory information, especially for things like perishables or food items, people want to see, does this thing have the necessary regulatory information, barcodes, or your SKUs, which are your apologies, that's store, not stick, store keeping units, which is an alphanumeric logo that businesses use to track inventory, essentially. Design for experience. Remember, you're not designing for yourself, you're designing for user experience. So some of the things we've spoken about are all contained in there, from the types of materials to use, and then if you want to explore the option of surprise and delight, include a call to action if you choose to. You can say to your clients, write on your packaging material there, tag us on Instagram, take a picture and, let us see you in your outfits or whatever, whatever type of business you're doing, but stuff that allows your customers engage with you post purchase. Labeling and legality, this one is very important. So again, comply with all your local or national regulations for the industry that you operate in, things like safety warnings, the net weight of the asset, country of origin, expiration and batch numbers. If you're using materials, especially food items or cosmetics, that people can potentially react to any of the ingredients in there. You want to list out all the ingredients and put warning notes too. Then lastly, with your print and production under your packaging, use die lines. Die lines are templates, right, that outline how to fold, how to cut in your packaging materials. Work with experienced printers and try a test run before you scale up. So before you go and invest in a particular type of packaging materials, I've had clients, who have made such mistakes. They start with a packaging material that they believe, the owner and the and the team believe that this is suitable for the business. Then they produce it in mass quantities, right? They produce a lot, and only to discover, as they start to use the packaging materials, customers start to give feedback and they realize they need to make some adjustments or make some improvements. Now the entire investment has gone bad. So it's always advisable, start, especially if you're starting out business, start with just some, use it, get feedback so that it's easier to scale it if it's good. And if you need to, either rework it or absolutely cast it away and put in place something else, then you want to do that. So let's look at these two examples very quickly. And I think I'll share a third one. I'm not sure it's captured in here. The first is Nike. I'm sure we're all familiar with that Swish logo, right? Everybody knows this logo. And the logo is Nike's Just Do It campaign, a powerful example of brand storytelling, inspiring individuals to overcome challenges and to achieve their personal best. Their narrative centers around empowerment, perseverance, resonating with athletes and non-athletes alike. Okay. This Nike's brand is such a positive one and has been, existing for so long, right? You can see how simple it is. It's really just one color, right? Even if they're going to express it in other forms, especially in their shoes. But Max, I doubt that I have seen a Nike logo that is more than two colors. That's this Swish, by the way. Sometimes they play around with the name, they can make it multicolored, but the Swish, this tick, is usually one color. Now, the second is Dove, a cosmetic product. Its brand story revolves around building body confidence and promoting self-esteem. They focus on real women and challenge conventional beauty standards, creating a strong connection with their target audience. Now, regardless of whichever countries Dove is produced for, you will notice um, their their lettering is pretty much the same. Their fonts, especially for the Western side of the world, I'm sure when they produce for maybe your Asian or Middle Eastern countries, perhaps they need to write the word Dove in their language. However, in Arabic usually. But where you see this four-letter word, the font type is consistent. You might see it appear in different colors, but not multicolored usually. Okay. And then I think the third that I wanted to mention is Apple. We're all familiar with the Apple logo, right? The beaten apple. Initially, that wasn't the logo. Their very first logo, they had to rebrand as well. Their first logo, the first Apple logo, was a picture of a tree or so, with an apple falling on the head of Isaac Newton. That's what the stories have. But then they had to rebrand to this half, or well, partially beaten logo, partially beaten apple, because they wanted to make a distinction between that fruit and other types of fruits that look like it, like cherries and the likes. Okay. So in a bid to do that is why they created that beaten portion. Okay. So we said all that to say, as a business, make sure that you are telling a powerful story with your brand. Your brand story can either be a function of what birthed the vision, right? Or the journey you're taking customers through, where you're getting them to, what your unique value proposition is. Now, can I ask a question here? Look at this image up on screen and in the chat room very quickly. Tell me, who is the customer and who is the consumer? Who is the customer? Who is the consumer? Who is the customer and who is the consumer? Anybody? Quick exercise, everyone. Baby is consumer, woman is customer. Interesting. Baby is customer, mother is customer. SS, can you check your response? One person has to be the customer, one person has, except you're saying both of them are customers, okay? That's another school of thought. Elizabeth says customer is mother, baby is consumer. I hope we're not saying baby is consumer because it's the baby that is eating the food. Joy says baby consumer, mother customer. All right. Okay. Everyone who says baby is the consumer and mother is the customer, everyone is correct. Now, when you think about marketing, you must always know, who am I selling to? Who are my customers? Your customers typically are the people who have the purchasing power, right? But may not necessarily be your consumer. And in this case now, baby food, for example. So that's why I said everyone who has said baby is consumer, they're correct. Okay. Now, when you're producing, using as an example, when you're producing for children, for example, yeah, you know that you need to, you're thinking taste, you're thinking colors and the likes. Now, understand that there is the person that you first need to appeal to who has the purchasing power. There is also the person, the end user, who will eat, because the customer can buy. Why? Because they like the way you have packaged it, you know. They like how you have, it looks very simple, it's easy to tear, but the consumer who is going to eat it is not interested in the things that resonate with the adult, right? That's one on the one hand. There is also the school of thought of, oh, if the customer is not impressed, they will not even buy it in the first place to be able to give it to the consumer to partake of. Are we together? So every marketing effort, you must always make this distinction. Who am I selling to? Your consumer is the end user of your products. Your customer is the person who controls the buying decision. So you must always ensure that you're posturing to be able to appeal to both. Perhaps one more than the other, but you're posturing to be able to appeal to both. So your customer acquisition, and this we'll talk about customer acquisition now and customer retention. It can be unpredictable, but thoughtful planning is always required for any business to get it right where customer acquisition is concerned. Remember when we did our financials, there were scenarios we created that we said the only way a business can break even is subject to the volume sold, right, or an increase in price. Now, when you think about volume sold, you think about achieving that by reason of the number of, or how large your customer base becomes, how your customer base is growing, how many more people am I attracting month on month, quarter on quarter, year on year, how many more customers am I targeting, and how many am I converting, how many am I acquiring, right? So usually I think maybe to achieve, depending on the nature of the business and the industry, sometimes to achieve a 10% customer acquisition, you probably need to do maybe times 5 or times 10 of the effort. That is, reach about 100 people to be able to convert, 50% or convert 20% of that number as customers, as paying customers. Are we together? So the effort is not measured in just how many people did this our publicity reach, my Instagram ads, how many people did it reach? It is conversion at the end of the day. How many people was I able to convert? Then there is retention. How many people have been able to come back of the people that I have converted? How many people have come back again and again to purchase from me or to, utilize my service? So a startup would only thrive by marketing smart, acquiring customers in a way that differentiates it from the crowd, and building on an enthusiastic customer base. So you constantly are keeping your customer base looking forward to what it is that you do. Let me give an example. I once tasted a colleague's meal some years back. This would be maybe shortly after COVID, say 2021, when we resumed back into physical work. He was having salad, so I tasted from it and it was so good. And that day I ordered the same salad from the vendor. And can I tell you that I have stayed with that vendor? They have increased prices like how many times? I mean, between 2021 and now, the price of that salad has literally doubled. But I have stayed because they have maintained, consistency in just what they do. And I have also gotten introduced. So they started out making salads, but after a while, they started making banana bread, and breakfast meals that I also got introduced. So I started trying out their different products simply because of one product. And I have remained with them. But this week, I still bought their banana bread. And so for someone like me in that vendor's book, I am a repeat buyer. You understand? I am a customer. In fact, I'm in a separate category. I'm in the category of people also because of volume that I bring to the business, right? How much I buy from them. I'm in the category of people that they send a message to say, are you placing any order today? Would like to know, we have this, we have that available. Do you understand? So they obviously have then segmented their customer base to be able to figure out who is where, and the likes. All right. So a price war is not the only way to acquire new customers. Sometimes the new business may need to introduce greater value for money, greater value for money, right? Remember the wig example I used, I think it was last class, that I said two people can be selling wigs, right, at the same price, but somebody decides that for every customer who buys my wig, I do a free installation for them, or I give them a free wig cap. That's additional value. So it's not only about changing your pricing. Remember the different pricing strategies we talked about, but it's also seeing how else, can I capture a chunk of this market share without necessarily changing my price. Yeah. Now, customer retention. So after your customers have been acquired, you need to keep them. That's what retention means. Ability for a business to be able to keep its customers, right? Not losing them. It is about appreciating your customer for their business. That's part of how it's a key way to retain them. There are businesses that I have patronized. I'm using myself as an example now. There are businesses that have gone back to patronize simply because of how they responded to me after the first purchase. You purchase something from them or you engage their service. They send you a message immediately after you are done. Afterwards, they're calling you to check on your user experience. Then a few days after, they're checking in on you, you know it just shows a lot of thought has gone into it, and they're telling you, they are reminding you, okay, especially if it's a perishable, please, just to remind you that you can't eat this thing beyond. And somebody might be thinking, "Ah, that's me spending a lot of money, right, to manage one relationship." But here is also how to think about it. That one relationship can potentially give you 10 times 10 is a 10x thinking, because that one person can tell 10 people in their network, and you acquire 10 people by reason of this one person, right? That one person can always come back to you again. So think about it as an investment. Of course, remember that from a financial management point of view, you must account for all of these retention activities. You must put naira and kobo to them so that it features in your financials. It features in your book, your records that you've spent this X amount to manage. It's called customer relationship management, right? To oil the wheels so that people can keep coming back, to purchase from you and also refer you. Another great way to, okay, before I go to other ways, but some businesses use innovative means to appreciate their customers. But the best way is by delivering the highest quality of value for the customer's money. Every customer wants to feel at the end of a transaction that this was money well spent. And it is your responsibility as a business owner to give them that feeling. There's some businesses who you spend money and you're upset with yourself. Not only was your money wasted, but also your time, because your time ultimately is your money, right? It can be translated into money for you. So, first, greatest retention strategy is delivering the highest quality of value for your client's money. And then, of course, another way to appreciate them is to institute a customer loyalty scheme. These schemes are designed to encourage customers to buy more products while giving them a feeling of privilege. Now, locally here, right, there are businesses who do this. I have just not seen the follow through as much. So I'll give an example. I know Prince Ebano Supermarket, when it started, they used to do this. In fact, you will be upset with yourself if you go shopping, especially when you do bulk shopping and you don't go with your loyalty card. At some point, you didn't need the card. You could just give them your phone number and they would accrue your points to you. And I personally found it very useful because there were times that I could spend the points alone to shop because my points have been accumulated over a period. And of course, dependent on the volume that I have purchased at different points. And it was good. And then all of a sudden, they stopped it. They first started out by saying, oh, they weren't accepting points. The system wanting, system something. So just excuses till eventually they faded it out. So some businesses have it. They'll tell you, do you have a loyalty card? They'll tell you, oh, we will give you points. But you never see those points being used for anything at the end of the day, right? So let's look at a case study quickly of a business that leveraged a loyalty program and how it impacted them ultimately. This is Starbucks. Starbucks is an international organization, or is a coffee store essentially, right? They sell coffee drinks, different types of coffee drinks. They sell coffee beans. They also have some merchandise. Well, it's such an old brand, right? And has existed for quite a bit. Now, it was credited with revolutionizing the coffee industry. They took something that had been done the same way for decades and they turned it upside down. They are in most gateway cities in the world, right? In fact, I've always wondered why we don't have a Starbucks in Nigeria, right? Because they have very faithful followers. Some of us, once we enter certain countries, you are looking for your next available Starbucks because you have specific types of coffees that you drink from them and you only get it in Starbucks, especially when you live in a country like Nigeria where there is no Starbucks. So they've been doing things differently ever since, including customer loyalty, and they have something called the My Starbucks Rewards. And it's at the start of this program. I mean, there are other companies that are now doing something similar, but they were pioneers. And it was seen as one of the best retail loyalty programs in existence. They've created a loyal following of customers, both with their customer experience and revolutionary rewards program. Even in the financial services sector, let me say this quickly, you find that some of the banks also have similar reward programs. So for example, if you bank with maybe, I think, Access or what's this one now? But at least Access, maybe Zenith, you can use their cards. If you have a particular type of account with them, right, that account can grant you lounge access at the airport. So you can you can access any of the lounges once you have that particular card. Maybe it's a credit card or a debit card, a particular type of debit card. right? So again, that is also part of how they reward. And then some of these banks, they also have access to some, you get a certain discounts. I know FCMB tried to do that at some point, that there were certain places you could go to, maybe like IMAX and the likes, that you would get a particular little discount off your payment because you were using their Verve card, you know. So again, if you think about your business, are there things that I can consider maybe now or much later when my business attains a particular revenue base, or a particular customer base, or a particular profitability base, you know, are there loyalty programs or reward programs? You know, can I say things like, and some small businesses do it, buy 3 shoes and get 50% off a fourth shoe or a third slippers or something, you know. So think about what types of rewards can I introduce into my business. We see the impact of this loyalty program for Starbucks, for example, because again, people like things that they can get at really cheap sums or for almost for free, right? Anything that adds value, that is adding value to the customer, ultimately is something that you want to leverage. So 3-step loyalty program that Starbucks, still our case study, 3-step loyalty program that they embrace. One is a great experience on the app. The second is that they create points for grocery products purchased. And the third is they issue a physical gold card. This is when a member gets 30 stars in a 12-month period. That reminds me, my salon, I use a natural hair salon. They also run a loyalty or a rewards program. So in fact, let me see if I have the card here. Yes. I won't show you the name of the of the business, but it's something you can. I don't know if you can see this. It's something that you can leverage. So this is the business. They give you this card when you come, right? And they record all your appointments in there. Yeah, and they sign off on it. Every time you do a hair treatment, they note it down and they sign off. They write all the dates and all. Now, when this card is filled, it has 10 slots. When it's filled till the 10th slot, your 11th appointment is free. Do you understand? Your 11th appointment is free. I just remember that I actually have a business that I can reference. So you will do your hair for free. Now, it's not anything. It's not that you can do any type of hair. It's hair that has to do with their products, just it's a basic transaction. It's nothing too tedious. So that's also something a business can consider here, right? Now, let's talk about competition very quickly. We're still talking about customer relationship management, but you cannot talk about increasing your customer base without looking at your competition. In economics, competition is the rivalry among sellers trying to achieve such goals as increasing profits, market share, and sales volume by varying the elements of the marketing mix, which is price, product, promotion, and distribution. Okay? So competitor analysis in marketing and strategic management is an assessment of the strengths and weaknesses of current and potential competitors. When you know the strengths of your competition, it shows you how much work you need to put in, right? To be at your benchmark now becomes minimum. I must be able to deliver at the level at which competition is delivering. So that in that situation, what I do is I dilute the market share of competition. So if you take a location-based or what's that one with a competitive pricing arrangement, right? Or even a location where it is geographically defined. So if on a particular street, there's just 2 of you that own a mom and pop shop selling the same things, surely you know that you cannot be more expensive than competition, right? At the very minimum, you maintain the same price so that if your competition perhaps was selling to 10 people on that street, what then happens is you can potentially dilute to maybe 5-5 or 6-4 or whatever. That's the dilution that can happen. Now, when you drop your own price below competition, it means that you are pulling them in to yourself. Okay. So I'm not going to go into that because we've already talked extensively about the different strategies that you can use. But let's look at something very quickly. The changing landscape of competition. A lot of us grew up just feeling like competition is really just people who sell the same things that you sell. That's one. But there are other forms of competition that have come up over the decades, which is beyond just selling what I sell. It is people that are competing for the share, right? The financial viability or the financial muscle of my clients. Anything. So if you think about what will my customer spend their entertainment budget for, assume that again, this is just a generic example, all factors being equal. Somebody earns 100,000 naira and 10,000 naira there every month, the earmark for entertainment, right? That is, I can go to the cinema. Now, if you're a cinema owner, you assume that my competition is other cinemas. But you forget that your competition is no longer other cinemas. It is now whatever they can use that 10,000 naira to do in the entertainment space. And it can be gaming. It can be, what else? A date, night out, it can be anything. So if you look at what's on my screen, you can see Coca-Cola here, which is soda. You will assume now that the only competition Coca-Cola has would be Pepsi and all the other soda companies, but apparently not. There's another competition, especially in recent times, with the whole awareness of healthy living. It is people who produce, juices and smoothies and the likes. So you are competing for the same financial allocation that the customers have towards this particular entity, whatever buying power they have, right? So it means essentially that two unidentical businesses can be in competition for the entertainment budget of a family in a particular month, right? That's how you also need to expand your thinking where competition is concerned. That it's not just the person who is selling or rendering the same type of service, selling the same type of product or rendering the same type of service. It's also other potential products and services that can compete for this budget. I hope that helps somebody. So let's look at it quickly. There are three categories of competition that we've identified. One is your direct competitors. So those are the people who fall in the bucket of similar products and they have the same revenue goal with you. Like the first example I gave, you are selling mom and pop shop on the same street, selling the same thing, maybe biscuits, sweets, indomie, or noodles, and the likes. Your revenue goal is pretty much the same, right? You are selling the same products. You have your indirect competitors, those who are selling the same products with you, but their revenue goals are different. And their revenue goals can be different because maybe they are targeting a different customer base, people with a higher earning power. Let me give you an example. You know those women who sell fruits, right? Who sell fruits in nylons. They will cut up fruits or malams. They will cut up fruits in nylons. Now, that can appeal to certain people in certain places, but you can be rest assured that it will not appeal to certain people in say, your middle to upper class environments, because ain't nobody want to buy fruits that have been cut up inside nylon bag, black nylon for that matter. But at some point, I worked in Marina at some point. This was a ton of years back. And there were women who used to sell fruits there. They stopped selling fruits in nylons and then they started selling fruits in bowls. In fact, you can get there and they will prepare your fruit bowl in front of you, right? All you simply do is tell them the quantity that you want. They will cut up the fruit in front of you fresh. They would wash it in front of you so you can observe. and then they will make your fruit bowl for you. And those women were cleaning out because now they were selling to people who were particular about hygiene. And of course, you are paying for the plate, but people didn't mind paying that extra amount. Why? Because they could, at least it was guaranteed that the packaging was presentable. And from a cleanliness point of view, at least it was reasonably hygienic, reasonably, note my words. Now, the last category is your replacement competitors, so substitute products. Same customer, same time, same money, but different products that are competing for that share of time and money. So, how does this apply to you as a business owner or as a potential business owner? First is identify your competitor. And remember now, your competition is no longer direct. It is both your indirect and also your replacement or your substitute, okay? Analyze your competition. What do they want, right? What are they going for? Determine your competitor's strategy and tactics. What are they doing? How are they doing what they're doing? Because sometimes some people, I've had conversations with clients who have said to me, oh, they're wondering how a particular business is able to sell at this price because they have done the numbers. They've tried to, but they found that based off of their own operating costs, they're unable to match that price mark. And it's a function of perhaps this person, instead of using this product, they are using something else that is allowing them enjoy that breather in their cost profile, right? So that when they put it together, it does not significantly increase the amount that the customer has to pay at the end of the day. And sometimes it can be a function of volume too, right? It can be a function of, they are utilizing another part of their business. Let me give you an example. There was a time in this country where the price of cement was largely controlled by Dangote Cement, right? In fact, at some point he crashed the prices, and how I knew was because I used to manage a stock portfolio, right? And the all the other cement production companies were struggling. Now, Dangote does many things, right? And could leverage his entire operations to be able to achieve that. That's one. Number two is, in a monopoly situation, when you're trying to control the market, you can afford to take a loss in a particular season just so that you can control the market. And they say it's an evil strategy, but sometimes big businesses do that. They want to cripple their competitors, so there's a price crash. Everybody flocks to them. They take all their the customers clients, right? Then they start to increase the price gradually, but at that time some businesses are unable to recover from such a shock. Do you understand what I'm saying? Now, these are things that large businesses do when they want to, sabotage, as it were, and become turn a market into a monopoly. Yeah. So you need to understand your competition strategy. You need to also rank your competitors. What is the effect of what they are doing on their business? And it's easy. What kind of business industry are you playing in? Who are the top people in your business? Most likely they are known, right? What are they doing? Even if your plan is not to be like them from year one, but at least you are using them as your benchmark, okay? Which is my last point there, benchmark competitor. Which one of them do you want to beat eventually? Or first of all, is who do you want to even become like before you are even beating them? So up on my screen, I have a cross-section analysis of competition. You have your tier one. Now, we typically use this even for larger organizations when we want to analyze markets or we want to analyze industries. But I'm sharing this with you just, again, information is useful. The knowledge is useful, okay? Because you will not always be a small or a small business. So the first tier are your major companies, your large multinationals with huge market share, operating in multiple locations, both locally and internationally. Your second tier are your emerging corporates. They are your large local corporate organizations. Now, their revenue or turnover benchmarks too that we have assigned to this, that such businesses do a turnover of X amount to X amount, but I'm not going to bore you with all that information. There's a tier 3, which are your specialized companies. They serve a particular niche. They're not catering to everybody. And there's a tier 4, which are your marginal companies. So they are fringe players with very small market share. Once you've done a robust analysis of your competition, you must decide. Oh, my apologies, please. My screen seems to be freezing. Okay, you must decide where you want to play and the resources that you require that will get you there. Okay, so how do we stay ahead of competition? Again, if you tier and you determine this is the tier that I am, this is the bucket or the box that I'm currently playing in if you're an existing business. It is now, who are the people leading that bucket, that box? Who are the people on top of it, right? Even within that box, you can still do a further tiering, right? That is a ranking. You can do a further ranking and determine where you are and say to yourself, in my business, my next quarter goal is to move from this rank or this level to the next level. Okay. So critical questions to ask yourself: what products do my customer consider as substitutes to my products? What companies produce this? What is the main objective of each of those companies? That is, what are they about? How are these companies currently structured? What level of resources do they have? How have they chosen to approach the market? What are the main, who are the main companies and the challengers? What do I need to become a main company or a challenger in my bucket or in my box? All right, let's move quickly to legal and regulatory framework of doing business in Nigeria. I want to introduce you very quickly to certain terms. Some you're probably familiar with already. You know, the CAC, your Corporate Affairs Commission, the body responsible for the registration and regulation of companies in Nigeria. You have what you call your CAMA. CAMA is your Companies and Allied Matters Act. This is the law that governs the formation and the regulation of any business enterprise in Nigeria. Okay, so people, the legal entities that typically help with business registration will typically refer you to the CAMA. Now, taxes or your tax is a compulsory contribution to your government's revenue. It is levied by the government on a business profit, or it is added to some goods, services, and some specific types of transactions. So you have what you call your value added tax, right? Which is a tax that is applied on any service being rendered, right? Or a good being produced. You have things like consumption tax. There's certain taxes that are specific to your hospitality industry, for example, okay? And the expectation is that they're to remit those taxes to government. No matter how unhappy you might be about government, oh, they're collecting all of this money, they're not providing infrastructure. The part of the revenue generation strategy of the government is to increase taxes or tax obligations. As they do this, the expectation is that they're putting it into infrastructure. But if you have been following the news, say in the last 1 or 2 years, there have been some tax reliefs that have been introduced for businesses. So, for example, if your business is still within a turnover limit of under 25 million, I think, then you're not expected to pay taxes, right? You are a tax exempt business, right? But you must render returns. So there's something called annual filings, which is that you take your financial statements and you submit them to the tax authorities and you render a zero returns. That is, you're saying, because my business is still under that 25 million naira revenue benchmark or threshold, then I have no returns, I have no taxes to file. However, there are other types of taxes that you should pay attention to, and I will get there, especially when you have staff and the likes. Now, shares, this is a unit of ownership. A share is the equity rights, is the payment for equity that a business issues. Okay, so you have what you call shareholders. They are equity holders or equity contributors into the business. Sometimes the shareholders are you and your family members, right? Other times when businesses go public, that is, they sell a part of their stake, they then have external shareholders. Okay, and then a share is that unit of ownership. A shareholder, of course, is any person, company, or institution that owns at least a share of a company. Now, a checklist, simple checklist for regulatory requirements, your business registration or incorporation, it needs to be done. If you're going to do business in Nigeria, it's expected that you're registered or you are incorporated. I will explain the difference between both using the types of business registrations or incorporation entities that exist. You're expected to do your tax registration. This is the process of you obtaining what is called a tax identification number and a tax clearance certificate. You should open bank accounts. A number of people operate businesses and still use their personal bank accounts. We encourage, if you are serious with your business, if you think that your business might need to, at some point, get funding, apply for grants or whatever, then you want to make sure that from the get-go, you are separating your personal accounts from the business accounts, and it is clear, and you're routing transactions through the business account as well. So money that is coming into your business should not go into your personal accounts, should go into the business account. Money going out should not come from your personal account, it should go through the business account as well. And of course, you need to register with appropriate regulatory authorities. Okay, I have been speaking for a while. Is there anyone who would like to tell us if you're currently a registered business, tell us what type of registration you have in place before we go into the different types, before I introduce people to it. How are you currently registered? If you're a registered business, what is your registration status or registration type? And then if you had to engage regulatory authorities, which one of the regulatory authorities have you had to engage to register your business because of the type of work that or goods you're producing or service you're rendering? Anybody? Let me see the people that we have on this call. Okay, I see the papreneur. Yes, Audrey, I would love to hear from you. You're always very quiet. And I like the fact that your business is is bold, is the papreneur. So tell us, how are you registered if you're registered? Audrey, you've been given talking rights. Can you please share with us? Okay, you can chat if you can't speak. Are you able to chat? Can you type up your response? Anybody else? Ifoma, Clement, Elizabeth, Joy, Juliet. Is anybody here with a registered business? Okay. Hi, Audrey. Okay, Clement says not registered though, but I'm looking forward to acquiring my CAC next month, then my team. Fantastic. I love that. That's good. Thank you for sharing, Clement. Audrey, hi. Are you registered? If yes, what is your registration status? Okay, beautiful. How are you registered? What type of business? What's the nature of your registration? Limited liability company. Fantastic. Okay. Now, because of the nature of your business, Elizabeth says, I have my CAC, TIN, and trademark. You're registered as a business name. That's beautiful. Thank you. Nkoyo says, business is registered, but I have not started operations yet. Okay, fantastic. I'm glad to see that majority, have already checked the box of business registration. A few people have also checked the box of tax registration. Assuming that for those who are fully operational, like the papreneur, you already have your bank accounts opened as well. So Audrey, I was asking, did you also have to do any other form of registration because of the nature of your business? If yes, please share with us which of the entities are you registered with in addition to CAC? Yes? Okay, while we wait, let me just move on quickly because of time. You're yet to obtain your NAFDAC registration. Okay, thank you so much for sharing with us. Absolutely, because you are in the food business, you will need NAFDAC registration. So, an entrepreneur must understand that to run a successful business in Nigeria, you need to think about legislation, the applicable laws that govern the establishment of business. You need to think about the vehicles, right? The various types of vehicles through which businesses operate. Of course, you need to think about taxation, that is, various taxes and levies that are charged to businesses in Nigeria. Okay, I've discussed one or two of those. We'll discuss them further in detail. So let's look at the legal framework of doing business in Nigeria. We've said that you must be registered, first of all, with the CAC, with the Registrar General of the CAC. We've said that the laws that govern are based off of what's contained in the Companies and Allied Matters Act, CAMA. Now, foreigners may invest and participate in the operations of any enterprise in Nigeria by virtue of the provisions of the CAMA. A foreign investor wishing to set up business operations is obliged to take all necessary steps to obtain a local incorporation of a Nigerian company, branch or subsidiary of an existing company, which will be separate and distinct from its parent company, essentially saying that even if you're a foreign business coming to set up in Nigeria, you must have a local equivalent, right? You cannot come and operate as a subsidiary that is predominantly tied to its mother company by reason of its registration. No, it is that there has to be registration here that recognizes that business as a standalone entity. Now, the different business vehicles or the registration types that exist, you have your business name or sole proprietorship. Like Elizabeth says, she's registered as a business name. It's also known as a sole proprietorship. In some cases, it's called a sole trader. Limited liability company, like Audrey mentioned. You have unlimited liability company. You have a partnership. You have a company limited by guarantee. You have the foreign company. You have incorporated trustees, and of course, you have the representative office. Your business name or sole proprietorship, that is the simplest form of registration. And it is also the most popular. A number of people have it. A number of businesses have it. Small and small businesses are mostly registered as, business name. The ease of setup and of course the nominal cost to get the registration done. You only need to register your name and secure local licenses and you're ready for business. A distinct disadvantage is that the owner remains personally liable for all the business debts. So if that business ends up becoming bankrupt or, owes people, has a liability, say that business name borrows a loan and defaults on it, by law, right, the bank can take over the assets of the owner. So the business is not separate from the owner under a business name registration or a sole proprietorship. Let's look at what a partnership looks like. It has the same format as the business name. It's just that you have more than one person involved. And usually a lot of accounting firms, legal firms, consulting firms typically operate these partnership arrangements. You see Aluko and Oyebode, legal partners. You will see something and something, As at 2000, there were no provisions in CAMA for what is known as your limited liability partnerships, as you have in some jurisdictions, some countries, okay? But partnership laws that guide our operations here in Nigeria provides for the registration of those limited liability partnerships. It's just that in the CAMA, there are no provisions for them. There's no law. So there are two kinds of partners. You have your general partners who carry the risk and the liability of the business. You have your limited partner whose level of liability is limited, just as the word is, to a specific amount. Now, this model makes for better access to finance by a partnership in the sense that a financier can provide capital not only in the form of debt, but also in the form of equity. Since the financier is not involved in the day-to-day running of the partnership, it becomes desirable to that person that the liability is not open-ended. Let's move to the public limited company. It's different from the private version in that it's able to sell its shares to the public and may be quoted on the stock exchange. Now, understand that a limited liability company can sell shares essentially, but the one that is public, the one that goes public, remember what the example I was using earlier when I was talking about owning shares and then being able to sell, right? When a company goes public, it means that they have opened themselves up to external equity, right? People can come and have a stake in them by reason of paying certain money. Now, businesses do this to be able to raise money, to scale, to do bigger things, to buy capital assets, whatever, right? For a public company to be termed as a public limited liability company, it must have at least 500,000 authorized share capital, and subscribers must take up at least 25% of that authorized share capital. Now, the cost of running it is reasonably higher than the cost of running a private limited liability company, which is what Audrey currently has going on, right? She exists as a private limited liability company. All right. So this arrangement obviously is best suited for larger organizations. Big multinationals are the ones that do this. So all the names you see on your stock exchange, on the Nigerian Stock Exchange, right? They are large organizations. Private limited company, legal entity in its own right, and it is separate from its owners, that is its shareholders. It's very simple to run and it makes it one of the most common. So in addition to the business name registration, the other type of common registration you have locally here is your private limited liability company. As a shareholder, your personal possessions remain separate unless they are secured against the business for borrowing. Can I say though that as much as it is that these are this is what the law says, but we found in certain instances that sometimes in a bid to liquidate, maybe a company has become bankrupt or a company is owing, say maybe a company is owing EFCC, and in a bid to reclaim their loans, or so their obligation, their liability from this company, what they do is to liquidate assets of the company. Sometimes assets of the owners too can be caught up in the mix, right? But by law, this is the standard practice that the assets and the possessions of the individual shareholders remain separate from the business. But the law, the court of law, yes, the court of law can rule in certain instances that the assets of the owners should be reclaimed back until payment is made. Okay? A company limited by guarantee, in simple terms, is not for profit. I'm going to ask someone to please read, okay, so that I am sure that I have people who are paying attention and following. Who would like to read? Can you indicate so we can give you talking rights? Anybody interested in reading? Anyone? Okay, I will call someone then. Oh, thank you, Clement. Please, can Clement have... Thank you. Clement, you can go ahead. You've been given rights. Just help us read what's up on screen. Thank you. I can't hear you if you're speaking.
Okay. Okay, so company limited by...
You're audible now. Go ahead.
In simple terms, a guarantee company is not for profit and is the type mostly formed by charitable organization. Should I go ahead?
Yes, please, all the way till the end.
Okay. Second line, a guarantee company does not have share capital, but instead has members who act as guarantors. Third line, members do not own the company. They do not receive any profit and have no claim to the company's assets. The fourth line, all income guaranteed is used to cover operating costs and to achieve the objectives of the company. And the last line, a company limited by guarantee carries the suffix LTD, which stands for limited, and GTE, which I can't say, in its name. So that is it.
All right, thank you so much. GTE means guarantee. Thank you very much, Clement. I appreciate your help with this. Okay, so you can see the very distinct nature of a company limited by guarantee versus a limited liability company, right? They do not receive profits here in the limited by guarantee, but limited liability receives companies profits and can share profits. And how they share profits, especially for the ones that are public limited liability companies, is through something called payment of dividends. But for a company limited by guarantee, like it said, is the NGOs usually that's registered this way, charitable organizations and the likes, who have a particular mission. And so what they do is the equivalent of their profits, they put it back in the business to serve their objectives. Okay. Let's not bother with the foreign company. I think we've explained that a bit. And of course, incorporated trustees used for establishing not-for-profits, popularly referred to as non-governmental organizations, used for the establishment of social, scientific, educational, religious, cultural, and other similar bodies. The organization is required to appoint trustees. Now, the equivalent or the difference between the incorporated trustees and your limited liability company is that in the limited liability company, you have what you call board of directors. But in your incorporated trustees, you have what you call board of trustees. Okay. So these, and interestingly, your trustees cannot earn from the business by law. The law forbids them to earn. So they cannot be on staff, they cannot earn a salary and the likes, right? So you see incorporated trustees of XY Educational Support Foundation. That's how they are typically introduced, as against the other one that we say the board of directors of the Papreneur. What you have is incorporated trustees. Also, let's not bother about representative office. It's just a way that certain businesses run, right? And it's not too critical to our conversation, so we can skip that. So how do we register business in Nigeria? We've already spoken about that earlier. Your CAC, part of what you complete in terms of documentation is a copy of the memorandum and article of association of the business, a statement of authorized share capital of the company, together with evidence that stamp duty payable has been paid, and of course, a statement of the particulars of the directors, a notice of the situation of registered office, a declaration sworn by a lawyer. Then you have your stamp duty and filing fees. Then once it is approved, a certificate of incorporation is issued. And not only that, you then have what you call your constitution. You have your memorandum and articles of association as well. Okay, so there's different forms. There's your CAC, there's your CAC1, CAC4, and different documentation issued to you by the Corporate Affairs Commission. So let's go into taxation quickly as we start to wrap up. Is the primary way that society allocates the burden of government to its people. It's how government generates revenue to be able to meet its infrastructural obligations. It's a powerful tool for achieving economic and social policy objectives of government. It is a means of transferring resources from private to public sector. And then the standard definition of taxation is a compulsory exertion from a taxpayer paid in cash or in kind to the government to provide for the public services of common interest without particular regard to the particular benefits received by the taxpayer. Okay, so things like building or construction of roads, building of government hospitals, right, police stations, provision of power, and things like that. Yeah, that government should give any people. So what you have up on screen is the Nigerian tax system, just very simply put. Now, I need to say to you also that there have been a lot of changes in our tax laws in the last, 2 to 5 years. There have been adjustments and adjustments. One of the most recent adjustments is the one I described, that I said prior to now, small businesses used to pay taxes, but now in a bid to ensure that businesses are surviving more. If you remember from our very first class, I don't know how many of you were here, but I told you about the ease of doing business index and Nigeria's position on that index, right? I said we're maybe about number 130 something now, 138 or so from the previous position of 141 out of 190 countries. So government is actively working to see how can we enable the entrepreneurial side of our nation a lot more, moving us from a consumer nation, to a producing nation a whole lot more. And the way you do that is by enabling businesses thrive, helping, local businesses, giving them opportunities to be able to, aside from accessing funding, but also making it easy for them, provision of basic infrastructure that can allow them manufacture things locally and produce things locally. Yeah. So the tax system, like any tax system, is a tripartite structure. You have your policy, you have your laws, and of course you have the administration. And in a bid to establish an effective tax system, the policies and legislations need to be in place and of course are subsequently implemented. Now, for small businesses, even if you're not paying any business that is currently operating below 25 million as turnover and is exempted from tax, right? There are still other forms of taxes that you would pay. The one you are exempted from is called your company income tax. But there are taxes that have to do with your personnel, for example, which is called your payee, right? Or PIT, personal income tax. Payee means pay as you earn, but PIT is personal income tax, right? Now, for any business that has staff, full staff, the expectation is that you are remitting what is called payee on behalf of your staff, okay? So while you may not be paying company income tax, you are expected to pay payee, right? Income tax, or employee income tax. That's one. Number two is there's something called withholding tax, which is a responsibility that businesses have on behalf of government, to withhold certain taxes and remit on behalf of the vendors that they have that have registered services to them or provided goods to them and are charging vatable tax, right? So when they charge you VAT, the expectation is that you withhold a portion of the VAT depending on the nature of the service rendered. You withhold the portion of the VAT and then you remit it to government on behalf of that vendor. Now, on that vendor's book, that tax becomes a credit to the vendor and he can use that to reduce their tax obligation at any given point in time. So when they are filing, for example, at the end of a year, the expectation is that if, let me use Audrey and Busola as an example. Audrey rendered services to me, right? I'm also a business. I take Audrey's VAT that she has charged me, right? 7.5%, and I deduct a percentage of it, usually maybe 5%, depending on the industry, and 10% depending on the nature of the service rendered, right? So it's either 5 or 10%. I take that, let's assume 5% of that 7.5%. I remit it to government on behalf of Audrey's business. When Audrey is filing her taxes at the end of the year, she takes that credit note and recognizes it in her books and uses it to reduce her tax obligation, essentially saying, government, oh, Busola has already paid a portion of my tax for me to you. So what I'm now owing you is not as high as it should be anymore because I have credits with you sitting in your own account. I hope that makes sense to someone, just very simply put. Okay. We've come to the end of today's class, and of course, the entire program. I have tried to literally do a mini MBA or a mini entrepreneurship course for you. And I hope that you have enjoyed it and that you have learned significantly well from it. Let's see if we can take questions in 5 minutes before we shut down. Moderator, please. Okay, so I'm looking at it. It says, Ma, please, what did you call the index? Ease of doing business index. Ease of doing. I'm typing it in the room. Of doing business index. Thank you, Audrey. Thank you, Joy. Thank you, Ifoma. Thank you, SS. Thank you, Clemens. Abdulafiz in absentia. Thank you. Ifoma, thank you. Elizabeth, thank you. Okay, so Clement says, given Nigeria's evolving tax policies, how can businesses adapt their long-term financial planning to manage tax-related uncertainties while maintaining profitability and competitiveness in both local and global markets? This question is fantastic. Let me give you a very short summary to the very long question, right? Because one of the things, if you recall, when we were talking about what it means to even start to do business, when I talked about the operating environment, how many people remember that first class? I spoke about the operating environment, and one of the things that affects the operating environment of any business is government regulations, government policies. You can't control that, right? So all you can do is to work with the known. You cannot work with the unknown. You can preempt certain things given the direction of the economy. So for example, if government is becoming cash strapped and you can see that it is beginning to struggle to meet its obligations, right? To meet its borrowing obligations, there's a high likelihood that somebody can wake up and say, oh, let's start to tax people more so that let's tax businesses more so that we can get more money. Now, but I would say that for small businesses, where taxation is concerned, you don't have too much to worry about. The people that typically bear the brunt of tax-based decisions are bigger businesses, larger businesses with large turnovers, right? Because the model is still, the more you earn, the more taxes you pay. The more your business makes, the more taxes you pay, right? So I would say pay attention to the markets, pay attention to evolving government policies, because they can potentially, in fact, every business owner needs to be a risk manager. And one of the risks that you must always dimension as you do your business is regulatory risk. Yeah, risk caused by government regulations that they can wake up one morning and say they are changing something. I remember when they banned the importation of certain things, certain raw materials, and there are businesses that need those raw materials to be able to thrive. So you cannot fully mitigate or control government policies, but try and make sure that as you do business, you stay abreast of laws. You are in a community within your industry so that you can leverage information. Sometimes information will come into your community and you are able to, put in place a mitigant that shields you from that kind of external shock to your business, right? And of course, be prayerful. Some people, government policies have caused them to become millionaires and billionaires overnight. Policy that negatively affected others, maybe because they sort of sensed it ahead, they were able to put in place certain things that prevented them from, being adversely affected. And some other times is that the policy actually favors them. So it can be both positive and negative. Okay. Thank you so much. Exactly. You're correct. What is happening in the US markets? It's interesting in the early 2000s, maybe 2007, 2008. I mean, real estate was a whole thing, but we see how it's the US markets, right? The housing crisis, crashed and affected financial services organizations. Why? Because they had been heavily invested in borrowing. A large part of their balance sheet, of their books, was carrying debt to the housing industry, to the real estate industry. So one government regulation and there was a bust. Some businesses could not recover. Some banks could not even recover, right? So again, it's just making sure that as you go, you do what you can the best way you know how to, and trust God for the rest, but also be connected so that you can have access to information. It's important. All right. Any other? Thank you so much, Elizabeth. I appreciate the kind words. All right. I would at this point hand over to our moderator. Thank you so much for having me, and thank you for joining with me this past 6 weeks. I look forward to reading your great your business success stories as you share them with Adara Foundation. At least I know my people. So I look forward to hearing those great stories come through, that I would also be able to facilitate a class and reference your own business as a model example, the same way we're talking about some of these international businesses, that your own business out of Nigeria is also one that will be referenced in the coming days. Well done, everyone. God bless you.
Amazing, amazing. Thank you so much, Sola. This was such an exciting session from the first class to the last class today. Thank you so much for giving, us so much information on this particular course. We appreciate you. Um, Very quickly, guys, thank you so much for, staying through the whole session, the program from the first course to the last. I just want to let you guys know that we're not done with you all. So please stay tuned in the WhatsApp platform, the WhatsApp community. Like I said, our founder is very, very passionate about, improving the well-being of young people, both women and men in Nigeria, and also, reduce the level of unemployment as much as we can. So we advise that you stay on the platform. We have more exciting programs coming up, and if you are close to us, you definitely, get this information as soon as possible. And do follow other social media platforms, so that you can hear most of the exciting programs we have coming up for, the youths in our communities. Thank you so much, and to have a good evening.